What's up, fellas? This is Offensive No Dube, your currency trader and currency coach at FX Link. Welcome to episode 3 of our Traders Journal. It's basically called my trading journal, but it's me and my partner, so saying my will sound too greedy. I think it sounds best when I say our trading journal. This week we'll be taking a look on a pair that I posted analysis on, I think 2 weeks back, and from there price action didn't really get to where I wanted it until just recently. Now the pair, of course, that I'm talking about is the euro dollar, the flow of the market. So just to give you a quick update, initially we were looking at this ABCD pattern. From this A to B, we had been looking for equal measured move, then C to D. Lovely. As you can see, our completion of the D comes right back into our major structure level. So initially, like I said, we were looking at this ABCD pattern completion, and this is on a daily chart. So on Thursday, this is where price action got to a completion of an ABCD pattern. For some reason, I wasn't there to take the trade. I kind of missed it, and for this week we'll be looking to hop on this prevailing trade. Now for that, we can hop on to the hourly. Now a good point for us to have entered this trade would have been right at the, what do you call this, a double bottom. Yeah? As you can see, it even gave us a triple bottom where we had this 1, 2, 3. Significant. Just shows you how aggressive buyers are when they reach this level of structure. Like I said, this would have been a good point to enter where it would have minimized our risk. Could have been looking at a lower risk compared to the one that we'll be going for right now. So in this case, we're kind of switching from a counter trend, still a counter trend on a longer time frame, but when we come into the hourly, we're basically looking to hop on it, trend continuation. Now look at this. So what I'll be doing in this case, we'll be using my retracement tool. And okay, let's try to zoom in to make it nice and thick for everyone. Okay, and right here where we have our 1618, this is where I'll be looking to hop on the trend. So let's just switch to the 15 minutes. Yeah, this looks much better. So right where we have our 618, I'm going to level out a zone. As you can see, this is where we have a 618, and right at this level of structure we had a nice supply level, a nice demand level, or a support level, as most people like to put it. Yeah, so this will be our kill zone. Let me try to change the color, make it any color would do. Okay, so in simple terms, we'll be waiting for price action to give us a push somewhere in this level of structure, and if we get a divergence, a bullish divergence, plus extra confirmations, this is where we'll be looking to take the trade. And of course, we'll be waiting for price action to push back up. So this is how this trade will look like. Say that we do get an entry just somewhere in our kill zone, most preferably where we have our 618 retracement right at this level of structure. Stop loss would have to be below this wick to be safe. If you want to be a little more assertive, but for me, I wouldn't advise it. You could look to put your stop loss just below this wick, the wick of this candle. Let me zoom in. Like I said, if you feel confident, you could still be willing to put your stop loss just below the wick of this candle. But for me, to be safe, I'd rather have my stop loss below the wick, a few pips below the wick of this candle, and we will be looking at the estimate risk, just the wick of this candle at 00291, and just 5 pips below, with approximately 0035. I don't want to put it at an even handle number. And for our take profit, let's use the hourly. So for our first take profit, you might be looking to take it at the retest of the structure level, where already for a risk of 33 pips, this will be a take profit of 39. So you're looking at an estimate of 1:1,8. But for extended targets, you'll be looking to write it up back at this retest of structure, back at 0.0776. And in total, you will go for a take profit of 77.6 pips. For a risk of 33.5, you're looking for a total take profit of 77.6. Like I said, this will be a risk to reward of 2.32 risk to reward ratio, which will be a good trade. Now, like I said, it was just an update. We still need to wait for certain confirmations before we take this trade. Like I said, for me specifically, then one thing I cannot take a trade without will be a divergence. Now, whether it be on a stochastic, be it on a MACD, be it on the other side, doesn't matter. These are all oscillators. It just depends on which one do you prefer to use. Okay. So as I invite you on my live account, like I said, this will be us showing you our live accounts. As you can see, this, if you remember quite well, on our first episode, I initially showed a trade on the GBP Canadian, and although it went our direction, I was a little bit too early. I got spiked out, and as you can see, I lost minus 1.8, and I'm still in profit. Like this, we started with $100, but I took a trade way before we started our trading journal. So this is my current balance. Where is it? So this is my current balance, 101.50. Like I said, this is all about us growing a small account. I'm still in profit, 1.50, and hopefully throughout our journey with my trading journal, hopefully we could grow this account to bigger profits. Hope you enjoyed this video, and if you did, make sure to hit the like button so that we really know that you enjoy this content and we can continue providing more content like this. And if you're new to our channel, hit the subscribe button so you can constantly get our videos on a weekly basis. So again, Sunday, that day of the week, where we're just a few hours away from milking the market, I wish everyone a profitable trading week. From me, Offense Dube at FX Link. See you next time. Peace.